Good morning, Chairman.
Good morning, and good morning to you all. I'm Councillor Eddie Strangle. I'm chairing the Pensions Committee. Before we start with apologies for the meeting, I'd just like to run through a system that I've not tried before, but it may work or it may not. What I want you to do is to come off camera and stay on mute. And the only two people that will be on the screen will be Joe and myself. If you wish to speak at any point or raising a question or anything else, then you come on camera and I will invite you to speak. And if there are more than one, I will take them in order as they come up. And then when you've had your question answered or what you want to say is finished, then you come off camera and go back on mute. That way, because it only allows you 9 people, it makes it easier to see who wants to speak. So at this moment in time, if you can all come off camera, please. Stay off. Obviously, when there will be a roll call for a recommendation that needs voting on, then you can come on your mute and Rachel will give the roll call, but you do not need to come on camera for a roll call. We'll give it a go and see how it works. Obviously, presenters will come on and stay on until they're finished and also to answer questions. So with that in mind, and I thank you for adhering to that so far, thank you. We'll now go on to apologies for absence. So Rachel?
Sorry, Chairman, can I just do the attendance?
Yes, of course. Sorry, my apologies. Yes, you're right.
No problem. Then I'll do the apologies. Councillor Strengill.
Present.
Councillor Coupland.
Present.
Councillor Adams.
Present.
Councillor Bootroyd. Councillor Key.
Present.
Councillor Perrotton-Williams.
Present.
Councillor Mrs Rawlins.
Present.
Councillor Thompson.
Present.
Mr Antcliffe. No. Steve Larter.
Present.
And I believe we've got apologies from Councillor Waller. Thank you, Chairman. We also have the following officers in attendance: Claire Mackey, Accounting, Governance and Investment Manager; Joe Ray, Head of Pensions; Peter Jones, Independent Advisor; and David Morton, Investment Consultant.
Thank you, Rachel. I can see on the participants that Andy Antcliffe has actually joined us. So,
right, I'll mark him as present.
Thank you. That's right. So then moving on to declarations of members' interest. You don't need to declare it if you've already put a disclosable pecuniary interest, a DPI, or notified the monitoring officer. Is there anyone wishes to declare an interest? I've got Steve. Steve Larker.
Thank you, Chairman. Yeah, I declare an interest as a deferred and an active member.
Thank you, Steve. Any other declarations of interests? Yeah, Peter Coupland, you're on mute. You're on mute, Peter.
My mistake. You confused me already, Mr. Chairman. Yeah, it's on the PSPS company, which I'm chairman of. That they're a member of the pensions committee, of the pension board.
Thank you. Andy Antcliffe has got a declaration. Andy, what we're trialling is that we're not using the chat. If you want to speak, you just come on camera, then you say what you wish to say, and then go off again. Okay, Andy Antcliffe. Andy, you want to declare an interest? No sound. I can see that you're not muted where you are now. Okay, we'll move on then. Paul Key.
Yeah, sorry, Chair. I'm an active member of the pension fund.
Thank you, Paul. If you and Peter, thank you. If you and Peter Coupland can come off screen now, please. Thank you. Right, Andy, we didn't hear you. Do you want to make another attempt at your declaration of interest? Having IT problems, I've noticed. Okay, Rachel, can you note that Andy Ancliffe gives the normal declaration of interest that he gives at every meeting?
Yeah, thank you. Noted, Chairman.
Okay. We move on then to the minutes of the previous meeting held on the 16th of July by this means. We have the minutes from pages 5 to 10. First of all, does anyone have a matter arising from either of those pages, 5 to 10? No, thank you. Could I now have a proposer and seconder? Proposer first, that the minutes are a true record of our meeting on that date. I have a proposer. Just put your camera on if you're proposing, please. Thank you, Sue. As proposed by Councillor Sue Rawlings and seconded by Councillor Bob Adams. Excellent. Thank you both. Paul, can you come off screen? Thank you. Get in there. So, Rachel, would you do a roll call, please, on the minutes?
I will. Thank you, Chairman. Can I ask I will read our members' names alphabetically. Our members are requested to state either for, against, or abstain when their name is called. Councillor Strengill.
For.
Councillor Coupland.
For.
Councillor Adams.
For.
Councillor Key.
For.
Councillor Perrotton Williams.
For.
Councillor Mrs Rawlings.
For.
Councillor Thompson.
For.
Andy Ancliffe. Thank you. He's put 4 in the chat. And Steve Larter.
For.
Thank you. That's all votes for, Chairman.
Thank you, Rachel. Moving on then to item 4, the Independent Advisor's Report. Peter Jones, please.
Thank you, Chairman. Can I confine my remarks just to 2 broad topics, please? The first, I wanted to talk about the worsening coronavirus situation, but more particularly, obviously, its effect on the economy, the global economy. And secondly, a few remarks about the US election, which I did not tackle in the paper. When I wrote the paper, which was about 3 weeks ago, I did say I thought the global economy was starting to weaken, particularly in UK and parts of Europe. It just wasn't as robust as everybody had hoped in June and July, and that certainly proved to be the case. Just to give you some thumbnail numbers, we've had some statistics. We get some rather crude monthly statistics in the UK. So in August, and August, of course, is the middle month of the 3rd quarter, so hopefully it's representative. Output grew only by 2%. And to put that in context, a number of people were saying, well, surely it's got to be at least 5%, because the 2nd quarter was so bad, because it coincided almost exactly with the lockdown. So by any stretch of the imagination, I think Q3 for the UK is going to be disappointing. there's a similar situation in parts of Europe. It wasn't unexpected to see similar data in France and Spain, and also for that matter in the US. But what has surprised commentators is Germany is beginning to have troubles. And I think many of the committee will probably share my views that Germany's handling of COVID-19 had been almost textbook up to now, but it seems as if they're losing their way. So I think the conclusion must be that the Western world is going to have a very difficult economic winter. And indeed, obviously, that's what the Prime Minister's been saying. So output must fall, I think, from Q3 into Q4 of 2020. And the consequence, that most unfortunate of consequences, is unemployment must rise. And I think we all agree that the last thing we want in these circumstances is the cancer of unemployment in the economy, particularly because it's going to be focused on young people, I suspect. What does surprise me, and may surprise everyone else listening, is that China seemingly, and I use the word seemingly, has got over the virus. Their economy is not quite as strong as it was in 2019, but there was a week-long public holiday last week. And by all accounts, the transport statistics, you know, the train journeys and the like, were almost as good as the previous year. So Asia generally seems to be shaking off the virus. Can I turn, Chairman, to the US election? I didn't comment 3 weeks ago because I thought the outcome was quite difficult to call. You all know what's happened since, so I'm not going to repair to that. But I do want to talk about the US stock market. Both the tech stocks, or the NASDAQ index as it's called, and also the broader S&P 500 index. They are both very close to their all-time highs. Now, partly this is due to the swing in the opinion polls. At present, US unemployment is rising fairly quickly, and obviously the economy is starting to falter. Congress is gridlocked, so that the stimulus to the economy that is required, the stimulus is being blocked by Congress, which cannot agree what to do. And we've got the prospect of a Biden victory. And if the Biden victory was to coincide with them winning both the Senate and the House of Representatives, then it's pretty clear that in January you get a major stimulus program. And that is what has buoyed up, I think, the stock market. But I do want to emphasize, I know a number of people are saying, surely these tech stocks are far, far too high, they must fall. My observation is that if you're looking for major winners from COVID, then actually the tech stocks are part of that. Chairman, we are talking on a piece of high-tech gear which didn't exist in reality 9 months ago. So we've got a rather strange conundrum at the moment. Mr. Jay Powell, who is chairman of the US Federal Reserve, that's the US Central Bank, is chastising the politicians for not enacting a stimulus program, which the economy very clearly needs. That's most unusual. It's usually the other way round. The politicians want to give the money away and the central bankers don't want them to. So fundamentals are largely deteriorating, but not all, as I've said. Personally, I don't think fundamentals are key to the levels of stock markets at the moment. Much more important is the amount of liquidity that's around. It is absolutely prodigious amounts. in this surge of liquidity from all the global central banks, and they are not going to take it away, in my view. So, Chairman, just to conclude, can equity markets fall? Can they have an attack of the jitters? Yeah, obviously they can. I suspect if they go down, they won't stay down. And the alternative is bonds. Bond yields, well, US long treasuries yield 1.5%, and UK long bonds yield, I think, about 0.5%. Most investors don't find that attractive. What I'm pretty sure is that they don't offer the sorts of returns that are required to fund our accruing actuarial liabilities. So I'll stop there, Chairman.
Thank you, Peter. Well, there's an old saying, and excuse the unintended pun, but when the USA sneezes financially, the rest of the world catches cold. So we'll look at it with interest in the first week of November and see what happens. So thank you for that, and thank you for your report. The recommendation is to note the report, and if anyone wants to ask Peter a question on what he's just reported on, then please come on screen and you can ask your question. If I don't, then I would ask you that we note the report, and there's no need to go through a voting process unless anybody disagrees or wishes to raise a point. So I'll take it as a silence. The next 3 seconds. So that's agreed that we note the report. Thank you again, Peter, for your report, and we'll move on to item 5. Item 5 is the report by the independent chair of the Lincolnshire Local Pension Board. So can I hand over to Roger? Welcome, Roger.
Thank you, Chairman. Good morning. Chairman, I'm going to assume that the report has been read, so I'll just concentrate on the conclusions and the assurances in right at the end. There are 5 main issues, Chairman. First of all, and this is not a criticism of Mazars, but the board does have concerns at the quality of the external audit for a complex pension scheme with £2.5 billion worth of assets. I think the audit fee was 19,000, which certainly, in the view of the board, is too cheap, really. And as a comparison, I mean, I chair a private sector scheme, 2.3 billion. We spend 3 times that on external audit. Now, I'm conscious that matters are out of your hands, my hands, and we're waiting for the outcome and actions arising from the Sir Tony Redmond report, which looked into audit in local government. So there's nothing we can do, but it is a concern, Chairman. Second point, the pension board recommended 2 additional items for inclusion in the risk register. Now, I assume you'll take that at item 6 of your agenda.
Correct.
And then, Chairman, there were 3 recurring themes. The delays in payment of contributions and submission of the information. It's fair to say that, that there was some improvement in the March quarter. But I mean, it's one of those things. Most are good. There are a few outliers still. And then the second point was the suspense accounts, which contain benefits for members who are not successfully traced. And then the third one was the data scores. And I mean, given the scores, 70-odd% for scheme specific, we're just concerned about that. And I know that West Yorkshire Pension Fund have got a data improvement plan. I'm also conscious that with COVID, it's pretty difficult, but there's still a concern there. And then finally, Chairman, a final comment. The Pension Board felt that the West Yorkshire Pension Fund team transitioned successfully and seamlessly to working from home. And the board were, well, they praised the team for the support that we were able to give to members. And, you know, it was a fairly seamless transition. And I think March through to June. I think I was pretty good, actually. If there are any questions, I will try and answer them.
Thank you, Roger. Any questions from any of the board? If so, put your screen on, please. Doesn't appear to be any, Roger. Yeah, you're right on the recommendations. We will defer the second recommendation there until Joe's report on the next item. So I can't see anybody wishing to ask a question. So thank you for your report, Roger.
Thank you, Chairman.
So, as it says in the recommendations, we're requested to note the report. So I'll assume that unless anybody pops their head up, that we've noted the report, and we will consider the second recommendation as a deferment until item 6, which is coming up next. And with that in mind, I can't see anybody wishing to speak, so we'll hand over to Joe for item 6 on the agenda, which is the pension fund update report. Joe.
Thank you, Chairman. This is the standard quarterly report, and there are just 2 areas that I'd like to highlight here that relate to the report's recommendations. Section Part 5 on page 24 recommends 2 additional risks are added to the risk register. As Roger just mentioned, these were proposed by the board and are detailed in his report, but I've also got further detail at paragraph 5.3 here. These cover 2 areas: the failure of border to coast and not meeting the requirements of the pensions regulator. So it was considered that these were risks that were big enough and should therefore be added to the register. Given the controls that we have in place that you can see that's shown there, the suggestion is that these are both green risks. Section 7 on page 27 is the second area I'd like to cover. This sets out the exit credit policy and the proposed changes to the funding strategy statement that will be included as part of this policy. The full policy is attached to Appendix E on page 99. I'll just give you some brief background on that, though. The exit credit policy has been brought in basically to protect the fund following regulation changes that came into force in May 18. And these were then amended in 2020 following concerns raised by the funds. Prior to these initial regulations, when an employer left the scheme and a cessation calculation produced a surplus, so basically they had more assets than the expected liabilities, this surplus was retained within the fund. If there was any deficit, so if there weren't enough assets to cover the liabilities, then this was recovered from the exiting employer. These regulations changed that and meant that any surplus had to be paid back to the exiting employer. And so basically the new regulations meant that without having a policy in place, contractors exiting the scheme could potentially get very large amounts of contributions paid back to them, and in some cases perhaps even more money than they had paid in, purely due to the timing of their entry and exit into the fund and market conditions over that period of time. So once that cessation valuation is carried out at that exit time, there have been instances in some funds where the value was greater than the contributions paid in. So the policy in the appendix clearly sets out the practice that will be followed at any cessation event to determine what, if any, amount of surplus will be paid out. As with any changes or new policies that affect employers and the funding strategy statement, this has to go out for consultation with all employers. That went out in August and September, and we've had no concerns received back from any employers in that consultation. So both of these sections that I've just mentioned have recommendations for approval, which I'm sure we will come to after questions. The final comment that I'd like to make is just on the trainings and conferences section at section 8. Officers obviously haven't attended anything in person since the last meeting. However, we have attended many virtual webinars and there's been lots of discussion meetings held. These have mainly covered the hot topics at the moment, so around COVID and how funds are managing, around McLeod, around the 95k cap, amongst other things. In addition, a number of the committee attended the Border to Coast annual conference held on the 2nd of October. This provided a useful update to members on the progress of Border to Coast to date, on the economic outlook, and on the future strategy of Border to Coast. So I'll now ask the committee if they have any comments that they wish to share on any training events that they have attended. And following that, I'm happy to take any questions on the report. Thank you.
Thank you, Joe. If anyone has a question, can you come on screen, please? No. No questions. Obviously, the conference was an interesting one. I know that we had a few of our committee on that. There seemed to be an echo here. It was not without its problems, especially when they showed the slides on the screen. Very difficult to see because they weren't using the full screen, but it was a first attempt. So I think hopefully in a year's time we'll be out of this and we can get back to normal as conferencing goes, but who's to know. So thank you for that, Joe. Nobody seems to wish to ask you a question or comment.
Chairman, I think Mike would like to ask you a question.
Right. Well, I'm looking at the screen. I thought when you put your camera on, it would come up on the screen. Mike, put your camera on.
It is on.
Okay.
Chairman.
Well, obviously this is now you're on. Now I can see you. So
okay. Yeah, it's at the bottom of my screen, but
the camera won't come on my screen until somebody switches their camera on. Then I can see that you want to ask a question. That's the point. Now I can see you. So, yeah. Mike, fire away.
It wasn't a question, really. It was an observation on the training and the Border to Coast conference, which I thought was actually well organised and well presented. The only thing was a number of the presentations were pre-recorded, and rather than going through them on the day, it might have been helpful if they'd have been available. I know access was available to the conference site prior to actually have run through those the evening before would have saved a little bit of time on the day. The discussion groups, unfortunately, the first group, the audio was very poor and almost non-intelligible, but otherwise it was very good. I picked up a couple of points from the strategy, which was essentially it's what you're in, when you're in, and not which manager you're with that's actually important. And local democratic input was essential, since the default would fall to local taxpayers. So I think though they were actually important points from the training, and essentially those are comments on that. Thank you very much, Chairman. Thank you, Joe.
Thank you, Mike. Appreciate that. Right, if we can then go back to the recommendations, please. Obviously, I'll take it as read unless anybody says anything to the contrary, that we note the report, first of all. But I want to separate out both those recommendations, and we'll take them one at a time. The first one is to consider and approve the additions to the risk register as suggested by the Pensions Board. So, Rachel, could I have a roll call, please, on that recommendation?
Yes, thank you, Chairman. If members can state either for, against, or abstain when I call their name. Councillor Strengill.
For.
Councillor Coupland.
For.
Councillor Adams.
For.
Councillor Key.
For.
Councillor Perrotton-Williams.
For.
Councillor Mrs Rawlins.
For.
Councillor Thompson.
For.
Mr Antcliffe. No, I think he's still having problems. Steve Larter.
For.
Thank you. That's all for Councillor Strengill.
Thank you, Rachel. Moving to item recommendations 3, consider and approve the exit credit policy and the amendments to the funding strategy statement. Again, Rachel, a roll call.
Yeah, thank you, Chairman. First of all, just for the benefit of anyone listening, Andy Antcliffe has indicated that he voted for the previous recommendation. I'll now move on to recommendation 3. So, Councillor Strengill.
For.
Councillor Coupland.
For.
Councillor Adams.
For.
Councillor Key.
For.
Councillor Perrotton Williams. Councillor Perrotton Williams.
Councillor Perrotton Williams did say, Rachel, that she may have to pop out for a particular part of the meeting. So I'd assume that's this time.
Okay. Councillor Mrs. Rawlins.
For.
Councillor Thompson.
For.
Miss Antcliffe. He's indicated 4 in the chat. And Steve Larter.
For.
Thank you, Chairman. That's all 4.
Thank you, Rachel. Appreciate that. Moving on then to item 7, the Pensions Administration Update Report. I'd like to invite Eunice to come on screen, please. Obviously, everybody has read the report, so I would ask all presenters to keep it as brief as possible. So, Eunice, over to you.
Thank you, Chairman. I hope everybody can hear me okay. Chairman, do you want me on screen or is my audio okay?
It's your choice. Audio is fine.
Yeah, I'll carry on with the audio if that's okay. So, yeah, this is the quarterly update to the Pensions Committee for the period April to June. The first part of the report is the performance indicators. As you can see from the performance indicators, obviously during a very difficult period, we have continued to perform against the SLAs in the bulk of the KPIs and continue to perform very well. It has been a difficult period, and I think as the chairman of the Pensions Board alluded to, we did transition very efficiently and very quickly. I guess one of the advantages we had was that whilst when lockdown was introduced in March, during the period of transition, our office remained open. So we did in tranches of getting staff enabled to work remotely, and as soon as they did, then they were working from home whilst the others were still in the office. But just focusing in on the KPIs, most of those KPIs are very good. Productivity as well in terms of number of cases was fairly high as well, so we hadn't really noticed any big differential in reduction in productivity levels. I guess the 2 KPIs really, just to mention, where there is underperformance is the monthly postings. A lot of that was outside our hands in terms of obviously schools closed and some of the employers closed. So we did receive some late returns, which then we obviously have to process as well. And then on the transfer out quotes, again, those are below par, and the main reason for that is the extra regulations and the requirements stipulated by the pensions regulator in terms of additional actions required from pension funds because of potential scams that were prone really in this difficult period, and there have been lots of potential efforts by scammers to get members to transfer their pensions out. So that's an area where we're having to focus extra steps and resources into. I won't mention too much about membership details, you can see that for yourself, but fairly consistent, and as well the number of joiners. There were 111 joiners to the scheme from Lincolnshire and 341 from other employers. 50-50 membership as well, 133 joiners for Lincolnshire and 169 for other employers. One employer exited during this period, no new additions in terms of employers. The satisfaction level certainly has had a big increase from the previous period. I think the previous period was a bit of a blip. No real reasons were identified from the customer survey responses that we received in terms of why that was low, but certainly we're pleased again during this period that levels have achieved over 90%. Internal disputes, there were no appeals either at stage 1 or stage 2 during this period. There was one old outstanding case with the pensions ombudsman, which has now been completed and concluded. Compensation payment of £500 was paid by LCC in that case. Administration update, I won't mention remote working because I've already covered that really. But again, with the COVID-19, I think we just mentioned there what our focus has been on, which is obviously number one focus is to pay members benefits and processing retirements, and then supporting members with good decision making, and that's primarily to do with transferring out their benefits to absolutely make sure that is what the member wants and they are aware of what they're giving up, etc. Annual benefit statements. Again, we did have some slack from the pensions regulator in terms of extending the period of issuing ABSs, but we were quite sure in ourselves that we would meet the 31st of August deadline, and we did get 99.3% of members eligible to receive the ABSs to post their ABSs out, and the remaining members are ones where there's queries on the records or potential actions on the records to complete. I'll mention McLeod because that really is the hot topic at the moment, possibly with the 95k cap, which is something that's just very, very fresh at the moment. But focusing on McLeod, this is a case where it's age discrimination. I'm sure you're all familiar with this, and there's a consultation undergoing at the moment, which has closed recently. But this is to kind of put members that were allegedly discriminated against because the protections when we went to this care scheme was only for older members. So now there will be a big piece of work once we get the regulations in place to look at members that didn't have the underpin protections, and we've already started work on that in terms of consultation with our pensions admin system provider, because we will be relying on them to come up with revised calculations, and also already starting to kind of engage with the employers, because a lot of the work will be thrown back at the employers in terms of providing us with data, which some employers may not necessarily hold, or payroll providers may not hold, and some employers will have changed payroll providers as well. So this is going to be a difficult exercise, and we're not sure at this moment in time, until we get the regulations, whether there will be a defined period in which this work has to be completed. But we do anticipate that potentially there may be up to 30% of fund membership that we will have to visit and relook at their records, and potentially some people will have already retired, died, transferred out. So there's a lot of complications and a lot of work that will come out of McLeod. So it's a case of watch this space, really. There was one security breach during this period. It was reported to Council's ICO officer, to the Council Data Protection Officer, who deemed that it was an isolated incident and didn't need reporting to the ICO. During this period as well, we had an audit undertaken on our information security management system, and the objective of the audit was to confirm that our management system was well maintained, operating in accordance with the standards. Pleased to say that there were no non-conformities identified, and there were actually 46 positive observations made by the auditor. Attached to Appendix B is the current technical issues, which hopefully you've all read. So I don't intend going through that. And I will just end my report on the shared services budget. Last year's outturn came out at £15.87 pence per member. This year we've budgeted for £16.60 per member. The increase is due, and again you'll have seen this on previous reports, but we have a long-standing restructure that now has been agreed, and that now is in the process of being implemented. So some of the costs will be attributable to that. Potentially, there may be some cost as well from the MacLeod exercise as well. So I will end my report there, and happy to take any questions.
Thank you, Eunice. Well, I've got a comment and a question. First of all, it is encouraging looking at the KPIs. I mean, there's only two that you normally, your eyes are drawn to, obviously anything underperforming as far as the target percentage met. But given the fact that there are only two, and basically the death in service, there were only two cases, and one was met, I think that's fair comment given the circumstances. And also on the transfer out quotes as well. Again, as it's mentioned, the extra requirements from the pensions regulator to highlight pension scheme scams, to members. It's fairly understandable that would perhaps delay the process, and I think that target, although not achieved, is fully understandable. My question is, do you have a plan for the extra, to manage the extra workload that MacLeod will bring? Eunice, please.
Thank you, Chairman, for that question. We are at the early stages of devising a full-blown plan. Effectively, we've set up a project team that is already looking at what the steps, what the issues will be, what information we need, who we need the information from, etc. So the project team has already met a couple of times. We are looking at starting a recruitment exercise because we do have vacancies on the structure, and obviously with MacLeod we will need the resources. So rather than carry the vacancies, we will be very soon, in the next couple of weeks, starting a recruitment process. And our plan really will be that we will set up a small admin team specifically looking at MacLeod and maybe other projects that might come as a result. And I'm thinking again the 95k cap that might bring us lots of work at very short notice and within very short time scales. So yes, we're in the process of formulating a more detailed plan.
Thank you. I've got Steve Larter wishing to ask. Steve.
Thank you, Chairman. Just on the shared service budget on page 110, the numbers for 2021 are exactly the same as the 1920 in terms of the budget compared to the outturn at 76,734. And in table 8.2, the outturn in 1920 in the expenditure exactly the same in the 2021 forecast. I just wanted to double check that are those numbers correct, because it'd be very odd that they would be exactly the same 2 years in a row.
I'll have to pass on your question, unfortunately, and come back. I'm not these figures have been provided by our financial controller, so I'm really not an expert on the financial figures. So I would have to defer that question and come back with a response on that one.
Could I ask you, Eunice, how you would come back to Steve and the rest of the committee on that?
I'll go through Joe and Claire, and they can maybe pass details to you.
Thank you very much. Steve, does that answer your question?
Yeah, that's fine, Chairman. Thank you.
Yeah, thank you very much. Anyone else would like to ask Eunice a question or make a comment? I'll accept that there's no one else wishing to, so the committee are asked to note the report unless anybody indicates otherwise. We'll accept that Eunice's report is noted. Thank you for that. If we can now move on then to item 8, which is to receive a report by Claire on the employer monthly submissions update. Over to you, Claire.
Thank you, Chairman, and good morning to all of the committee. This is the standard quarterly update on late and incorrect employer submissions. The report today covers the first quarter of 2021. The number of late payments and data submissions are set out in the table on page 124. And as you can see, we're analysing data this year in a little more detail than we have in the past, with incorrect employer information being split between late payment for cash contributions, late submission of the supporting data, where both late payments of cash and data submissions are made. And then finally, where the cash and data are submitted on time, but they don't agree or they contain errors. As you can see, the data submissions were poor in the first month of the year. There's often an increase with late data in April as we see employers changing their payroll providers at the beginning of the financial year. And as you can see, as we move into May, these teething problems have largely been resolved. During the quarter, one of the large payroll providers also experienced some trouble with submitting data, and this is arising from IT issues at their end. No problems were reported with West Yorkshire. This employer has been referred to the pension fund representatives, and further training and support is being offered and provided. Details of individual employer returns are set out at Appendix A to the report, and Table 2 sets out the number of fines issued during the quarter. And as you can see, although there were people who made late payments or data submissions, there were no fines issued during the first quarter of the year. I'm happy to take any questions now on the content of the report.
Thank you, Claire. Are there any questions on the monthly submissions update? Can't see anybody indicating by coming on screen, so the recommendation is to not only note the report, but to consider any further actions that the committee wish to take against employers submitting late or inaccurate payments or data. I don't see anybody wishing to comment further on the action taken, so we'll accept unless anybody indicates that we note the report and no actions to be taken at this moment in time. Claire, are you happy with that, Claire?
Thank you.
Thank you very much. So the report is noted, so we shall move on, and we're back to Claire again on the investment management report. Claire.
Thank you. The quarterly investment management report sets out for the committee the fund asset allocation and overall performance, individual manager updates, and a commentary on manager performance provided by the investment consultant David Morton from Hyman Robertson. Section 1 of the report covers the fund overall asset allocation and performance, and the quarter under review saw a partial bounce back from the losses seen in the final quarter of 1920, and the fund's overall position in value increased by 10.6%. As it was equities that were particularly affected in quarter 4 of 1920, it was this area which saw significant increases in quarter 1 of 2021. And global equities increased in value by 20.3% and UK equities by 10.2%. And that is reflected into an overall positive return for the fund during the quarter of 10.5%, which is just behind the benchmark. Section 2 covers individual manager performances, and the detail of this is set out in the table at the bottom of 131, and this gives manager performance over the last 3 months, 12 months, and since inception. Here you can see that Border to Coast Global Equity Alpha Fund was significantly ahead of the benchmark, while Invesco and Morgan Stanley Alternatives lagged theirs. There are detailed reports on each manager's performance, and these are set out at Appendix C to the report, which starts on page 139. The final section of the report, section 3, sets out an assessment of managers' performance and for their portfolios, and has been prepared by the investment consultant David Morton. The assessment picks up various aspects and culminates in an overall rating ranked from 1 to 5, with 1 indicating a poor quarter and 5 a stronger one. I'll now hand over to David to take you through this section of the paper and his thoughts on the fund managers, and we'll be happy to take any questions either now on the previous sections to the report or once David has concluded his part of the presentation.
Claire. David?
Thank you, Claire. So yes, just to reiterate that the big driver of returns over the quarter was the general bounce back in markets, with US equities in particular being one of the drivers. By comparison, the relative performance of the managers compared with their benchmarks was relatively small. So just to echo one of the comments from earlier, it's very much a case of what you were in that drives the returns rather than who you were invested with. Having said that, there were a couple of differences I just wanted to flag in terms of your larger asset allocations. So the main one, unfortunately, probably not a surprise to you, that Invesco have continued to underperform, which is particularly disappointing, seeing as they also underperformed when markets fell at the start of the year. So they have underperformed in both falling and rising markets. And again, it's not obvious to me what's actually driving that performance, which is a cause for even greater concern. Border to coast global equities, as Claire said, did well. They outperformed the benchmark. For me, they didn't bounce back quite as much as they might have done. So you may recall that they underperformed quite heavily in quarter one. One of the components of the portfolio in particular performed poorly. And while they did recover, there's still a bit more to hope for on that. So in terms of relative to expectations, we've put them kind of more or less kind of in line with what we would hope for, rather than kind of give them a lot of credit for being ahead. Morgan Stanley, almost the opposite to that. While they were ahead of their cash plus benchmark, we might have expected a bit more from them, given how well markets in general have done. But I think that is really an averaging from quarter one, where again, you may remember we said that they did relatively well in a down market. So I think that's the 2 quarters taken together, they've performed pretty well. Everything else pretty much in line with the benchmark, given the types of mandates and managers you have. So not any other cause for concern there. Thank you.
Thank you, David. Back to you, Claire. Okay, well, that's fine. I assume you're finished your report now, Claire.
I have, thank you, yes.
Thank you, David. Could I ask the committee, have you any questions for either David or Claire, please? Please show on your screen on. If you wish. No, there doesn't appear to be anyone wishing to ask a question. So thank you very much for your report, Claire and David. And the recommendation is that the committee note the report, unless I see anything to the contrary. We will now note the reports. Thank you very much, Claire and David. Moving on then to the item 10, the Performance Measurement Annual Report. Over to you, Jo.
Thank you, Chairman. This is the annual performance measurement report, so looking at the longer term performance as measured by the fund's custodian Northern Trust, and also how the fund compares to the average LGPS fund in the PERC local authority universe. The table at 2.2 shows the performance of the fund, the performance of the benchmark, consumer prices, and public sector earnings over the 1, 3, 5, and 10-year periods. Over the longer term, over the 10 years, the fund at 6.5% per annum is comfortably ahead of the required return to meet the long-term liabilities at 4%, and also ahead of inflation and earnings at 2.9% and 1.7% respectively. Unfortunately, as the committee are aware, the last year has been difficult for the fund, with the underperformance of Invesco being the main contributor to the below benchmark return. The performance against the local authority universe at paragraph 4 across the 1, 3, 5 and 10 years is set out in the table at 4.9. Additionally, this year, I've also just shown the returns of the first and 100th percentile funds for comparison, so you can see the dispersion of funds across the LGPS universe. I wasn't planning to say any more, so I will happily take any questions you have on the paper.
Thank you, Joe. Any questions? Please come on screen. Doesn't appear to be anybody wishing to ask a question, Joe, so committee are asked to note the report. We can now accept that the report is noted, so thank you for that, Joe.
Thank you.
Moving on then to item 11, which is the Pension Fund External Audit Report 2019-20. Over to you, Claire.
Thank you very much. The Pension Fund Annual Report and Accounts for 1920 have been prepared and the audit is now substantially complete. A copy of the External Auditor's Report, the Audit Completion Report, is attached at the appendix to the report and is at page 161. As you can see from this, there are no material misstatements identified and no unadjusted non-material misstatements for them to report. As was explained at the meeting in July, there were expected to be, and there have been, a number of changes to the draft reports. These have resulted from additional information relating to illiquid asset valuations becoming available to the fund. This information was received over the summer and has been incorporated into the financial statements. Details of these changes are set out in the report in paragraphs 4 to 6, and for completeness, a copy of the final pension fund accounts have been attached to the report at Appendix B. The external auditor expects to give an unqualified opinion on the pension fund accounts by the end of October. The audit opinion is unqualified, but it does contain an emphasis of matter, and this is relating to the material valuation uncertainty, which has been given by valuers of property unit trust funds. This doesn't affect the unqualified opinion on the accounts, but it's there in the opinion for readers of the accounts to the disclosure that the fund has made on these matters, and these are set out in notes 4 and 5 to the accounts. The other unquoted assets, which are classed at level 3 in the fair value hierarchy, and that's assets like private equity and infrastructure. Now they're classed at level 3 because there are significant unobservable factors which contribute to their valuation. The auditor says that these are still subject to further internal review by their processes, and these may also be covered by an emphasis of matter. The auditor hopes to issue their opinion by the end of October, and we should have further clarification on that at that point. Once the auditor has issued the opinion on the accounts, the annual report and accounts will be shared with all interested parties as set out in the paper, and I'm very happy to take any questions from anybody now.
Thank you, Claire. Committee, are there any questions from you? If so, please put your screen on. No one showing. So the recommendation is that the committee note this covering report and the audit completion report prepared by the council's external auditors, Mazars. I can't see anybody wishing to comment otherwise, so we shall accept that the recommendation is that we note the report. So thank you for that, Claire.
Thank you.
And thank you, committee, so far. Now, we have to move to consideration of exempt information. And in accordance with section 100A4 of the Local Government Act 1972, addendums items 12 and 13 have not been circulated to the press and public on the grounds that they are considered to contain exempt information as defined in paragraph 3 of Schedule 12A of the Local Government Act 1972 as amended. Press and public may be excluded from the meeting for the consideration of these items of business. So we are excluding the press and public at this moment. Rachel, can you confirm?
I need to do a roll call vote, if that's okay, if everyone can state for, against or abstain when I call their name.
Absolutely, Claire. Thank you.
Councillor Strengill.
For.
Councillor Coupland.
For.
Councillor Adams.
For.
Councillor Key.
For.
Councillor Perrotton Williams.
For.
Councillor Mrs Rawlins.
For.
Councillor Thompson.
For.
Mr Antcliffe has indicated in the chat that he votes for. Steve Larter.
For.
Thank you. That's unanimous, Chairman. We'll now end the live stream.
Thank you.
I will confirm when the stream has ended.
Thank you, Claire.